Inflation is stealing your money. In this video, we will show you the exact wealth-building strategies you need right now to beat inflation and protect your financial future. Remember to like and subscribe for more Money Smart Basics videos. If you have any suggestions for financial literacy topics, please leave a comment. Stay until the end to receive a bonus tip. Let's talk about inflation, the silent thief that sneaks into your life, often unnoticed, and quietly chips away at your hard-earned money. Every single day, inflation is draining your wallet, even if you don't see it happening. It's not just about prices going up. It's about your money losing its power, bit by bit, purchase by purchase. Each year, the same dollar buys you less than it did before. What you could afford last year might be out of reach this year, and it's a pattern that repeats itself over time. Think about it. That loaf of bread your grandma bought for just a quarter decades ago. Today, it's $4 or more. That's not just nostalgia, it's the real impact of inflation, eroding your purchasing power year after year. If you simply park your money in a regular savings account, hoping it will grow, you're actually losing ground. The numbers might look safe, but the value is slipping away. The interest rates on most savings accounts are so low, they can't even keep up with the rising cost of living. Your money sits there, earning pennies, while inflation quietly eats away at its real value. You might see your balance go up by a few dollars, but in reality, your money's true worth is shrinking. It's like running on a treadmill. You're moving, but you're not getting ahead. Saving is still important, especially for emergencies or unexpected expenses. But if you want to reach bigger long-term goals like buying a home, sending kids to college, or retiring comfortably, you need to do more than just save. You have to invest your money. Only by investing can you hope to outpace inflation and actually grow your wealth over time. Investments like stocks, mutual funds, or real estate have the potential to deliver returns that beat inflation. Historically, the stock market has returned about 7 to 8% per year on average. If your money isn't earning at least that much, you're falling behind. It's not just a suggestion, it's simple math. This is why $1 million today doesn't buy what it did a generation ago. Inflation is relentless. And it's why you must be intentional and proactive with your money. Don't ignore this silent threat. You need a plan that not only protects your savings, but also grows your money faster than inflation can steal it away. Stop letting inflation rob you of your future. Start making your money work for you by investing wisely and consistently. Diversify, stay informed, and let your wealth grow. Understand the enemy, know how inflation works, and you're already halfway to winning the battle for your financial future. Take action today, and protect what you've worked so hard to earn. When it comes to protecting your money from the silent thief called inflation, there's one tool that stands out above the rest: investing in stocks. Stocks have a long history of helping people not just keep up with rising prices, but actually get ahead. Every time you buy a stock, you're not just making a bet. You're becoming a part owner of real businesses. These are the companies that make the products you buy, provide the services you use, and keep the world running day after day. The best businesses don't just sit back and let inflation eat away at their profits. They find ways to adapt, innovate, and grow stronger. Whether it's by raising prices, finding new efficiencies, or launching new products, they fight back. And, as an investor, you benefit from their resilience. As a shareholder, you get to share in their success. When these companies thrive and their profits rise, the value of your shares can grow even faster than inflation, helping you build real wealth over time. While cash sitting in a bank account slowly loses value and bonds often struggle to keep pace, stocks have a proven track record of outpacing inflation over the long run. They've helped generations of investors turn small savings into substantial fortunes. Of course, the stock market has its ups and downs. There will be times when prices fall and headlines make you nervous. But history shows that over decades, stocks have delivered unmatched growth and helped millions achieve their financial dreams. Investing in stocks isn't about gambling or chasing quick wins. It's about owning a piece of the world's most successful companies. Companies that shape our future and drive progress. By investing, you're giving your money the chance to grow faster than the rising cost of living. It's a proven strategy to build wealth, secure your future, and provide for the people you love. If you want a comfortable retirement, the ability to help your family, and the chance to leave a legacy, owning a piece of the action is essential. Don't let inflation erode your dreams. Take control. This is how you transform your savings into real lasting wealth. The journey starts with a single step, so get in the game and let your money work for you. Investing isn't about throwing money at random stocks. That's gambling. Smart investors use a margin of safety, buying quality for less than it's worth. Think of it like buying a great tool on sale. You get value and a cushion if things go wrong. In investing, this means buying solid companies at fair prices, not hyped up ones. Most people should use growth stock mutual funds, managed by pros who look for value. These funds spread your money across many companies, reducing risk. This approach gives you downside protection and upside potential. If you buy at a fair price, you're less likely to panic during market dips. Don't overpay for quality. That's the foundation of smart investing. Margin of safety is your best protection against losing money. Stick to it. Many people spend years waiting for the perfect time to invest, hoping to catch the market at its lowest point. But here's the truth, that's a mistake. The perfect moment rarely announces itself, and waiting on the sidelines often means missing out on valuable growth. Trying to time the market, jumping in and out based on predictions or gut feelings, is a losing game. Even the experts get it wrong more often than they get it right. The market moves in ways no one can consistently predict. The real winners are those who stay invested for the long haul. They ride out the ups and downs, letting their money grow steadily over time. Patience and consistency are their secret weapons. The market is unpredictable in the short term. Prices can swing wildly from day to day or month to month. But your long-term success depends on how long you stay invested, not on the exact moment you decide to jump in. Missing just a handful of the best days in the market can cut your returns in half. Imagine sitting out during a sudden rally. Your portfolio could miss years' worth of gains in just a few days. The market has survived every crisis, wars, recessions, pandemics, and more. Each time it has eventually recovered and gone on to reach new highs. History shows that resilience is built into the market. Those who stay invested, even when times are tough, are the ones who are ultimately rewarded. Their patience pays off as their investments grow and compound over the years. On the other hand, those who panic and sell during downturns lock in their losses. They miss out on the recovery and often buy back in too late, further hurting their returns. Your job isn't to predict the market's every move. Instead, focus on being a patient, disciplined, long-term investor. Stick to your plan and let time do the heavy lifting. Invest for 5, 10, 20 years or more. The longer your money stays invested, the more it can grow and recover from any short-term setbacks. Only invest money you won't need in the near future. Keep your emergency fund and short-term savings separate so you're never forced to sell investments at the wrong time. With a long-term view, daily market noise and scary headlines don't matter. Ignore the panic, tune out the hype, and stick to your plan. Consistency beats reaction every time. Let time and the power of business growth work for you. That's how you win in the market, by staying invested, staying patient, and letting your money grow. If you can't time the market, how should you invest? Use dollar cost averaging. Invest the same amount on a regular schedule, no matter what the market's doing. This is how your 401k works. Automatic, consistent investing. When prices drop, your money buys more shares. When prices rise, you buy fewer. Over time, this lowers your average cost and boosts your returns. Example: invest $500 a month. When shares are cheap, you get more. When they're expensive, you get less. Most amateurs do the opposite. Buy high, sell low. Dollar cost averaging flips that. It takes emotion out of investing and helps you take advantage of downturns. Set it up, automate it, and let it run for decades. This is one of the most reliable ways to build wealth. Consistency beats timing every time. Make it automatic. Watch your wealth grow. The biggest threat to your wealth isn't the market, it's your own emotions. Greed and fear cause people to make terrible decisions with money. Greed strikes when markets soar. You want to chase hot tips and get rich quick. That's a recipe for disaster. Fear takes over when markets fall. You panic, sell at the bottom, and lock in losses. The only way to win is with emotional discipline. Make a plan and stick to it, no matter what the headlines say. Think like a farmer. Plant, water, wait. Don't dig up your seeds or sell the farm after one bad storm. Your investment plan is your farm. Trust the process. Your behavior matters more than your IQ. Control your emotions, and you'll control your financial future. Stay steady. That's how you win. Most people think stock market gains only come from rising prices. That's just half the story. The other half, dividends, regular cash payments from companies to shareholders. Think of dividends as rent checks for owning a piece of a business. Many strong companies pay dividends every quarter, providing steady income no matter what the market does. These payments add up over time and can be a stabilizing force in your portfolio. Companies that pay and grow dividends are often the most durable and reliable. For long-term investors, dividends are real cash, proof your investments are working. You can take the cash, or better yet, reinvest it to buy more shares. That's where the magic of compounding begins. Dividends are your secret engine of wealth. Don't overlook them. Compounding is the key to turning small investments into a fortune. It's your money making money, and then that money making even more. Reinvest your dividends to buy more shares, and watch your payments grow each time. At first, growth is slow, but over decades it explodes upward. Most of your wealth will come from growth on your previous growth, not just your contributions. That's why starting early is so powerful. Someone who invests less but starts younger will often end up with more than someone who starts late and invests more. Compounding isn't a get-rich-quick scheme, it's a get-rich-for-sure plan. Be patient, let your money work for you over time, plant the tree, let it grow, and enjoy the shade for life. That's the power of compounding. Start now. Here's the bottom line. Building wealth isn't about secrets or luck. The winning formula is simple. Own great businesses, buy at fair prices, and hold for the long haul. Patience and discipline are your greatest tools. Stick with your plan for decades, even when it feels slow or scary. Ignore the noise, invest consistently, and let compounding do the work. Your behavior matters more than your investment picks. Invest 15% of your income in good mutual funds, automate it, and reinvest dividends. Then go live your life. Don't obsess over your accounts. Trust the plan. The system works for those who stick with it. This is how everyday people become millionaires. They weren't lucky, they were consistent. The plan is simple. The only question is, will you follow it? You can do this. Congratulations, you made it to the end of the video. With that, you are ahead of 90% of most people in America. Here is the bonus tip that we promised. Before you click away, make sure you implement at least one of the wealth-building steps from this video today. Inflation won't wait, and neither should you.
The information provided in this content is for educational and informational purposes only, and should not be considered financial, legal, or tax advice. Always consult with a qualified financial advisor, tax professional, or legal counsel before making any financial decisions. The creator of this content is not responsible for any actions taken based on the information provided. Investments and financial decisions carry risk, and past performance does not guarantee future results.